Today we're talking about IPOs coming out the week of August 10th. If you like hearing about all of the upcoming IPOs every week, you've come to the right place. Plus, I also have some interesting news from rocket companies on their IPO last week that updates last week's video, including some of my own personal post-IPO thoughts on the company. Welcome to Healthy, Wealthy, and Wise in our weekly feature, IPO This Week, where we cover all of the companies going public, as well as the lockup and notable quiet period expirations. I'd like to welcome back our subscribers, and after the popularity of my in-depth analysis video on rocket companies last week, we have a lot more. So I want to thank everyone for supporting the channel and coming back this week. And for anyone new here that likes to keep up to date on the latest IPO information, we'd love to have you join the community as well. And you just do that by simply pushing that subscribe button. It's so easy and so free. But if you need to be convinced, feel free to watch on and I'll check back with you at the end of the video. And for anyone that has been following Rocket's transition to a publicly traded company, I'll share some significant news that came right from the CEO's mouth in just a few minutes, plus I'll add some of my own personal thoughts. But since most of you are here to hear me talk about the new IPOs launching, let's start there. So after a busy last week of IPOs, we get to catch our breaths a little this week, because as of right now, we only have 3 companies scheduled at the time of this recording. I actually waited a little longer to record it to see if there would be anyone else added to the calendar, but there wasn't, so this is it. So we definitely have some time to talk more about Rocket's IPO in this video. And also, just a quick reminder that while this video is meant to be informative, it should not be seen as a recommendation for you to take any action on the companies covered. You should always do your own research or consult with your own financial advisor when making any investment decision. So with that, first up is the biggest offering by market cap, and that is KE Holdings, ticker BEKE, China's largest online housing platform, who plans to raise $1.9 billion at a $20.7 billion market cap. The company was founded in 2001, and its platform has grown to include over 260 real estate brokerage brands, 42,000 community-centric stores, and 456,000 agents across 103 cities in China as of June 30th of this year. KE looks to grow its business through catering to both service providers and agents, as well as to end-user customers. The company is divided into 2 divisions, one that focuses on online and offline housing transactions and services, and the other that is a dedicated residential real estate brokerage. KE utilizes what is called its Agent Cooperation Network, or ACN, which is similar to the US's Multiple Listing Service, more commonly referred to as the MLS. The ACN shares its information with its almost 500,000 agents and other service providers. According to a 2019 market research report by IBIS World, the real estate agent market in China reached total revenue of $32 billion in 2019, growing at an annual growth rate of 5.2% between 2014 and 2019, with the growth attributed to the large population of the country, the accelerating urbanization process, rising household disposable income, and overall continued economic growth. Some of the company's investors include names like SoftBank and Tencent. You may be familiar with Tencent, who has been in the news recently as the Chinese company that owns the popular WeChat app, which was recently targeted by executive orders that ban any U.S. transactions with the company. As for the company's financials, they indicate that revenue growth has been strong, that their gross margin is increasing, and that they've been profitable in the first half of 2020. The company plans to use the net proceeds from the IPO for further growing the business, with 30% going to research and development, another 30% towards expansion of their new home transaction services, 25% for diversification of their service offerings and expansion of business operations into new geographical areas, and with the remaining balance going towards general corporate purposes. As we discussed on the analysis video on Li Auto that I released last month, like many Chinese companies entering the US markets, they use a variable interest entity structure, which means U.S. investors would only have an interest in an offshore firm with contractual rights to the firm's operational results, but would not actually own the underlying assets. Just something to be aware of, as there are legal differences as compared to owning a U.S. company's shares. The IPO is set for Wednesday with a proposed pricing range of $17 to $19, with trading expected to begin on Thursday. Let's stay with real estate and go to our next IPO, NetSTREIT, ticker symbol NTST, which is a real estate investment trust, more commonly referred to as a REIT. This REIT focuses on managing single-tenant retail commercial properties and plans to raise $310 million at a $554 million market cap. NetSTREIT plans to offer a 4% yield or dividend at the midpoint of its proposed price range of $19 to $21. The company's portfolio includes 160 plus single-tenant retail net leased properties spanning 34 states, and its tenants include familiar brands such as 7-Eleven, Walmart, and CVS. One of those things that always catches my eye is when all of the proceeds of the IPO will be going to the pre-IPO shareholders with nothing going towards investments into growth of the company. That's something that always gives me pause, and that's what NetSTREIT is doing with this IPO. And also considering there's a whole lot of uncertainty with commercial real estate in the current pandemic era, this is one that you really want to look a lot further into before jumping in. If you are interested in taking a position, the IPO is anticipated to happen on Wednesday, with trading expected to begin on Thursday. And last up is a company that may end up being the most interesting of the three because of some tech credentials, and that is Duck Creek Technologies, ticker DCT, which provides a platform for property and casualty insurers to improve their operational efficiencies for policy administration, claims management, and billing functions. The company currently has some well-known names as customers, names that include Progressive, Liberty Mutual, AIG, The Hartford, and Geico. According to a 2019 market research report by Mordor Intelligence, the global market for insurtech software and services is expected to grow from $5.5 billion in 2019 to $10.14 billion in 2025. This represents a forecasted compound annual growth rate of 10.8% from 2019 to 2025, with the reasons cited as the needs to increase efficiencies through automation as well as improve technological offerings. One of their main competitors includes Lemonade, who also went public this summer, and as you may recall, they did so with success. Duck Creek's recent financial results show that the company is profitable on an EBITDA basis and has growing top-line revenue, but with a reduced gross margin. The company is looking to raise $300 million from their IPO, with pricing expected to be between $19 and $21. As of today, we expect the IPO to occur on Thursday the 13th, with trading beginning on Friday. Okay, so there you have this week's IPOs. While there is not a big well-known name on the slate, you never know if one of these companies can take off and become that big name you hope to get in on early. Speaking of big names, let's revisit rocket companies who had their IPO last week. But before I do, I want to ask you to please hit that like button to let me know that you're enjoying this video. It's more important than you might think, as it helps me grow the channel, as well as lets me know that videos like these are what you want to see. Plus, it's always nice to feel that the time I spent on making these videos is worth it to you. Alright, back to Rocket. You'll recall in the analysis video that I released last week, I said that the company did not plan to offer a dividend. I said that because it was clearly in the registration statement. You can see an expert written from the filing shown on your screen, with the first sentence stating, "We have no current plans to pay dividends on our Class A common stock." Well, on Thursday, when the stock started trading, surprise, surprise, the company's CEO, Jay Farner, gave an interview on CNBC saying that due to the strong year they were having, that they may offer a dividend to shareholders. That definitely caught a lot of people's attention, including mine. My first thought was that this might have been a way to combat the potential negative sentiment coming from the fallout of the downsized IPO. Again, just my opinion, and I could be wrong, but it just seemed to me to come out of the blue, as it was in such stark contrast to the black and white guidance in the recent S1 filing. Offering a dividend would actually create some more enthusiasm for investors considering the stock, so I feel like that is why he may have floated the idea. And he did use the word may, so we'll see if it actually happens. But whatever the reason for the change in course from the filing, a possibility of a dividend is a positive for the stock if it comes to pass. Some other thoughts I have were based on the reaction by the underwriters and institutional investors that resulted in offering 50 million less shares at a lower price than what was anticipated. Now, in the grand scheme of things, they still raised $1.8 billion, so I don't think you can call it a failure, but they did raise over $1 billion less than they expected, so I think it's fair to say that the actual IPO disappointed. But for the average investor that really believes in the company, that's actually a good thing for you. Are you thinking, why would you say that, Kevin? Well, I say it because with 50 million less shares floating around out there, that makes each of your shares a little more valuable, since more shares in the market would dilute the value of each share. So that was one good thing for everyday investors, but there was another positive thing. And that was when trading started, unlike some of the crazy IPOs that triple out of the gate before even one share sells, Rocket shares could initially be had under the IPO price of $18 before ending the day and then the week with some significant gains. I just think that the news of the downsized IPO weighed on some minds at the open of trading, which helped keep the shares at a more attractive price than if they were coming off of news of an upsized IPO, which potentially could have driven the price much higher at the open. So there really is a lot of nuances with IPOs, and I know a lot of people just look at them to see what happens on that first day. But I tend to look at them as a race with different legs, like a triathlon or a 4x100 relay race. So for the first leg, there is the opportunity to review the S1 filing, or at least get some of the highlights of that filing from the latest episode on the Healthy, Wealthy, and Wise channel. Then there is the actual IPO that happens before public trading that most of us average investors aren't able to participate in, but we can still learn some details from. Then of course there is that first day of trading, which is where most of the focus is. But then you also have the lead up and the aftermath of the expiration dates for both the quiet and lockup periods. This is why I also cover those on this weekly show. For some of you newer to the channel, if you're looking for more information on the lockup and quiet periods, I have a video detailing the IPO process and how it applied it to Albertsons companies which IPO'd earlier this summer, and it covers these topics, so definitely check it out. I'll link it for you. And I guess that's the perfect segue into sharing this week's expiration dates. Up first, we have the lockup period for WEIS ending on 8/10. On August 11th, we have tickers HLI, RVMD, and MEDS. And then on August 12th, we have tickers GRIL and DUOT. And finally, we have the quiet period for Go Health ending on August 10th. So there you have it. 3 new companies to consider investing in and more insight on the big IPO from last week. If you see something that needs updated from the time I recorded the video, please feel free to add it in the comments in order to update our community. I'll do that as well, as I want my subscribers to get the most up-to-date information. And if you're new here and we're waiting to be convinced to subscribe to the channel, I hope I did that and you've decided to join the community. We'd love to have you on board. And to everyone, please remember to like the video and share the link with others. After all, I hope that we can all learn from each other on how to take little, easy steps in making big improvements on our lives. Thank you for watching, and until next time, have a great day.